Hi, in this video we're going to be looking at the best Forex pairs to be trading. Of course, this is my opinion and everybody else will have their own opinion and not necessarily all agree with what I'm saying. However, I would say open your mind a little bit when you're considering what pairs you're trading. I spent a lot of time trading basically two major pairs, the euro dollar and the pound dollar, and over the last 18 months, 2 years, I've sort of broadened that out quite significantly, and more recently in particularly I trade what's the right thing to be trading effectively. Let's look at my criteria firstly of what makes a good pair. First is absolutely key is the liquidity. It must have really good liquidity. There's no point trying to trade something where you're going to be slips going in, slips coming out. It must have really good liquidity. Tied into liquidity is the spreads themselves, particularly if you're scalping, so that might reduce what you're looking at. But today with the brokers that are out there, some of the offerings on spreads across the whole board are fantastic. Now I'll give you examples. Well, I'm looking at a City Index, which is a rubbish price at the moment on the Aussie New Zealand dollar, 5 pip spread. You switch that to Pepperstone, for example, 1.2. That same currency traded using a different broker makes a significant difference. Spreads, it shouldn't be anything that holds you back too much if you're somewhere between the day stroke swing trading and upwards. Price action, I'm going to talk about this in more detail. It's got to have some decent price action. There is absolutely no point if the pair are almost totally correlated and not giving us any real action and we can trade on. So in other words, they mustn't be correlated. Finally, volatility. I do want some movement. I need a currency that's going to give me some movement over time. It doesn't matter if you're a position trader and you're holding for the long term, but as a day stroke swing trader, I want the movement to occur within the day, 2 days, 3 days, maybe week. So which currencies then? Starting, the simplest thing is to look at the majors. Look at the major currencies individually. You've got the dollar, US dollar, the euro, the yen, the pound, and then you've got the Aussie, the CAD, the New Zealand dollar. Of course, I've missed out the Swiss dollar there, but well, that's one I will miss out. It's very manipulated as opposed to just manipulated. All the currencies have some form of manipulation, but the likes of the Swissy and to a degree the yen, it's not as bad as it used to be. But other currencies that we should probably be looking at some point, such as the renminbi or the Chinese yuan, there's no point at the moment. They're too manipulated. So that leaves us those majors. So those majors can be looked at, but often and more recently I've been looking at the euro dollar and the pound dollar, and for long periods they're basically untradeable. So what should we do? What I've been doing is looking at cross pairs. Now there are some cross pairs are really good. So this is where we get to this point. I found the sort of the base currencies, and then I'm looking at the cross pairs, but I'm not looking at any old cross pair. For example, recently we looked at the pound Australian dollar. Now the Australian dollar pairs, some of them don't really move too well at all, and you get lots of volatility and not a lot of movement, but they can get into a trend, but with huge volatility, which is not particularly what you want when you're day trading, certainly not if you're scalping in the way that these move. You've got to pick your fight, and here's the point. So okay, we've got the major currencies. It's looking at the crosses. Let me just run through some examples, some good ones and some not so good ones. So I talked about the Australian dollar. You can look at the underlying. It's a commodity currency basically. The underlying what's its strength effectively. It's a commodity currency. So is the New Zealand dollar, but there are different type of commodities. I mean, one's very much into dairy, etc. The others into core raw materials. Much more. So that's one aspect of it. If you're looking at two commodity currencies such as the Aussie and the CAD, you might at some stage get some reasonable movements, but less likely so, because sometimes they're going to be quite tightly correlated. There will be times when they're not, and that's when you can look at trading them, and that's probably the key point here. This is the Aussie New Zealand dollar. This can be quite correlated at times. If you look back here even a few days ago, you can see it's quite a tight move. However, look at the bigger picture on this, and it's got some lovely trends in there. When you're setting your orders, setting your trades, you just want to be trading, if you're intraday trading, through part of the period where it's actually starting to move. More recently, we took this as a day trade today, actually, the breakdown here, down towards actually what turned out to be slightly different S1 that's actually than there. So it actually ran down towards its S1 today. Good example of something that's moving quite nicely on the bigger time frames into solid trends. Intraday, it's not a bad pair at times, and this is one of those times today. We saw there was some movement. Some days you just got to look at it when it's doing this and walk away from it, but that goes with a lot of the pairs. So other pairs, Euro CAD, I really like the Euro CAD. It has some really good movements at times. Again, you can look at some of these trends, and you got to ask, why wouldn't you be looking at this particular pairing to trade over 2 years of really decent trends at times? Yes, there's this retracement stuff going on here, but remember, this is a daily chart that I'm showing you here. Intraday wise, every time it had a decent retrace, it sold off quite well, but there were long periods before then that we just saw these fantastic moves coming through back in 21. So there's some really nice moves on this currency pair. So at the moment, well, the euro is getting the best of things, and then you can be looking at, well, come up the time frame or down the time frames and see what's happening. It's not always the best time to trade it. If it's choppy like this, steer clear. Don't just stick with it because it's the commodity, it's the currency I trade. It's like the euro, and let's just run to the euro, for example. I traded this for years, but there's been periods lately. I mean, yesterday, absolute great example of it being horrible. The Canadian dollar, I've always been a bit wary of it. It's a bit of a messy one, but look at yesterday, talk about a bit messy, but you can see when it's just chopping like this, yes, it's going to break out at some stage, but which way? It's not such a good pairing. So what I'm saying here in conclusion, look at the majors, look at the major crosses, but then look at the actual shape of what they're doing over the current periods, and look through time. If you've got the trend going with you on the bigger time frames, bring it down to the 4-hourly, check the trend that's still sitting there, and hopefully you'll catch it on the hourlies as well, and you've got more chance of being successful. It's just a case of widening what you're looking at, checking that your broker is not ripping you off for massive spreads like that horrible 5 pips from Citi. So there are plenty of examples where it's a lot less than that. Hope you find this useful. If you do, please just give me a thumbs up. If you like these sort of videos, subscribe to my YouTube channel. If you want to talk to me during the daytimes, you've got questions or whatever else, I've got both a Discord and a Telegram channel which you can join either. Details are below the video.